Here, we will briefly explain what is a relative strength index, or short RSI, and how to use it to make better trading decisions. It is a momentum indicator that measures the internal strength of the price moves. The RSI is a bounded indicator and moves between 0 and 100. Usually when the RSI is above 70, the price is considered overbought and a pullback or some kind of consolidation is to be expected. On the other hand, if the RSI is below 30, the price is assumed oversold. An example can be seen here, where the price was in the oversold region. Then the price predictably moved up. Another example is here, where the value of the RSI is in the overbought region. After this, the price went down accordingly. This is, however, not always true, as no indicator can predict the future with certainty. Go to our channel to see real daily analyses using RSI. But keep in mind that trading is very risky, and always do your own research before investing or trading. See you soon.